Hey everyone, my name's Andy. My channel's Finding Value. If you like making obscene amounts of money, this is the channel for you. Click subscribe. We're looking at the most undervalued assets in the world and investing in asymmetric bets. If you like this content, give me a thumbs up. So today I'm going to talk about market conditions updates. It's about all of it. And this is what really gives anyone who's an investor the confidence to hold. And it also aligns our investments with the market conditions that are coming up a little bit ahead of us. So this is how you position to be successful before the crowd comes running in and investing in the assets that you already have. So let's look at what I have for market condition updates. So I'm going to go over real estate, new home starts, recessions, dollar, euro dollar, a whole bunch of different commodity charts. I'm going to go over yields. I'm going to go over a whole bunch of things. Okay. So this is what sets, and it gives you a picture of what the market looks like and the conditions that are out there. So first we're looking at the 30-year treasury yield. We've got this downtrend line at the bottom here. We just broke that to the upside. It means that yields are moving higher. It means that expectations of inflation are ahead of us. Does it mean that inflation is just going to be this rampant tsunami that's going to overtake us? Probably not, but inflation's it's coming. And it could be a tsunami. We don't know. But in terms of the bond market, people are selling bonds, yields are going higher. And what that means is that bondholders are scared of inflation. They think inflation's coming, so they're selling their bonds and positioning their money differently for the future. The US dollar index. So this is the index, and just looking back, this is the commodity boom previously, the previous commodity boom. This is between the two commodity booms. This is why the dollar was creeping higher. We were in a recession and recovery phase of real estate. And in 2016, we were starting to get more inflation. Then eventually we broke out. This means that the dollar's getting weaker with respect to a basket of other currencies. So the dollar getting weaker is analogous to a commodities boom we also had and an expansion phase of real estate. Because the expansion phase of real estate is the driver of a weaker dollar. Next is emerging markets. And emerging markets did absolutely, it was on fire last commodities bull market. Just absolutely ripped it. It was a pack of cheetahs running wild for like 8 years, literally. And here we are, breaking out of this large chart pattern right now, making new highs and about to be an alpha cheetah flying to the upside. So I want to touch on the expansion phase of real estate because this is very important. There's 4 phases. There's a recovery phase, an expansion phase, a hypersupply phase, and a recession phase. This long-term occupancy average is about 1.5 million. That's how many new homes we have to build per year to hit the demand that is out there, in America at least. We were just coming out of a recovery phase into an expansion phase. I'm going to show you what that looks like on the new housing starts. There's a hypersupply phase where we build too many homes and it all comes crashing down in a recession. So we're going to go into new privately owned housing unit starts. This is single family homes. Each year on average is about 1.5 million. That's 1,500,000 of units. That's right about here if you were to draw a line across. And one thing I really want to point in here is that whenever the housing starts to decline, we have a recession. The yellow is when it's declining, and the dark or the light gray here is a recession. So we decline, recession. We had one decline where it didn't result in a recession. Decline, recession, decline, recession, decline, recession, decline, recession, decline, recession, decline, recession. So every time the housing starts to decline, it is deflationary. Now, if you look, when the housing starts go up, there isn't a single time where housing starts went up and we had a recession. Not a single one. Now, if you also notice, housing starts had to decline before the recession hit, which means that housing starts is a leading indicator of recession. It means that real estate is the driver of deflation. Now, I'm going to make another point coming up on some other slides here. First, I'm going to talk about 2 things here. This is the S&P 500 and commodity ratio. So it's commodity divided by S&P. It means commodities are expensive at the top and commodities are cheap at the bottom. I overlaid this chart, which means it's expensive and cheap, on the housing starts. Boom, that's what these are indicating. Cheap, expensive, cheap, expensive, cheap, and it's going to be expensive up here. Notice some correlations here. We correlate a commodity boom with a housing expansion phase. Commodity boom, housing expansion phase. They both happened at the same time. I have got this yellow area, we'll call it area over this curve, in between the 1.5 million new housing home units. That is the average demand that is needed for new homes. This yellow area all under this curve here, or over the curve, however you want to say it, that means that whenever you have yellow and you don't have much red above it, it means you have to somehow make up an expansion phase of that housing shortage. And that's what this is here. The red is above this line, and we're building in an expansion phase. This was a recovery, a recession recovery phase is these yellow. So if you add the yellow, and these teeny little red areas, you get a deficit over here. And eventually that has to be worked off and be created in this red area. So area under this line has to equal the area over the line eventually. And what we have over here is an absolute abysmal undersupply of homes. We didn't build enough homes because of all the foreclosures. Foreclosures in the mid-2000s screwed it all up. So we have to build a humongous amount of homes. It's 4 million to be exact. And we're going to have to go way into this expansion phase where the red area under the curve is going to have to equal this yellow area under the curve roughly. And we're entering a commodity undervaluation signal right here. That's this guy. Commodity undervalued in relationship to stocks. We've got the undervaluation, and we've got the expansion phase, and we've got the same alignment as it was in the 70 to 73 run and 99, 98, 2008. So same alignment. Here is 100 years of commodity valuation. This means that it's 100 years. It's never been this cheap. Over 100 years. We're actually down here. We are buying this at fire sale prices. COVID and this last crash screwed everything up. Put it into massively undervalued condition. Commodities, that is. So this is the euro dollar. You can notice that last cycle, this is the euro. Remember, euro's on top. So when this goes up, the euro's outperforming the dollar. 2000, we had the euro outperforming the dollar all the way to 2008. That look like it correlates with this here? Oh, it does. All correlates. It's all interconnected. 2008, we had a top. Sideways, we were in a recession and recovery phase of housing, real estate. And here we are breaking out again, going up into a new uptrend, just like this uptrend here. Remember, it doesn't go straight up. You've got pauses. It pulls back some. So we've got some pullbacks, so don't worry. But we popped out, and we're moving on up, which means that we've got a weak dollar in relationship to the euro. That means that we're entering an expansionary phase of real estate, and we can see it in the housing starts. Now, here's copper. Broke out to the upside. More data. Tin breaking out to the upside. More data. Nickel breaking to the upside. More data. Zinc in its pattern, probably going to break to the upside. More data. Silver breaking. This is actually up to the upside because we're at 25 now. Up here, we broke out past this and came back. More data. Gold broke out to 2,000 and pulled back. Yeah, here it is, 2,000 and pulling back. More data. Crude oil, this is going to blow through the roof to the upside, is my guess. It's breaking out to the upside. We're at 52 right now. This is a little bit older chart. Natural gas is still in its pattern. That's a good spot to be. Lumber broke up. If we break this upside pattern here, holy crap, this thing's going to run. It's going to be a ridiculous price. Cotton, this is probably moving up. Platinum broke out, looking great, platinum. Uranium broke out. Lead's about to break out. So what I'm seeing here, yield's going higher, dollar's going weaker. Euro dollar, the comparison, saying that we're in an expansion phase of real estate and that we have inflation. We've got the bond market saying, look, hey guys, I think we've got inflation coming. We're selling our bonds, going higher. If you look at even bond prices are going down because yields are going. You look at the commodity prices themselves, they're all going higher, right? They're all going higher. They're all breaking out of their chart patterns. What is the likelihood that we're in a commodities bull market. It's a very high likelihood because we have all the commodities breaking out, or at least the majority of them. You've got bonds signaling inflation, and you've got all of the currencies and everything else signaling inflation. Emerging markets is signaling inflation. All the indicators saying, hey, look, this commodity bull market's already on its way. Just started. So what I'm doing is I'm already positioned. I've got my oil, got my uranium, got my silver, got my platinum. Platinum does exceptionally well in commodities. So does silver. Those two metals are going to kill it. Those two metals right there. Then you've got oil and gas. You've got agriculture. Archer Daniels Midland, Mosaic, all these. You on and on and on. John Deere is going to kill it. Caterpillar is going to kill it. All these energy service companies are going to kill it. So you can pick your favorite companies. Throw darts at them. They're all breaking major patterns. And we've got some silver miners that are about to break some very large patterns. So the key here is to be positioned well. Position well here, get your shares, and you're on. If you guys like this content, subscribe to the channel, give me a thumbs up, leave comments on anything that you see that looks like a good opportunity for this commodity bull market. Throw names down there for the whole community. Thanks for listening. Finding value.